Welcome back and another Talking Technical, and I mean we have seen blood in the markets in September, and now everybody is just so excited. Everybody just wants to buy some shares. But I've got some nice requests here, and I hope that it can also assist you because I'm going to look at weekly charts. And I think maybe next week we must maybe look at monthly charts because I know some guys say, listen, Frans, I'm just buying for the long term and I'm not worried about the markets that drop and my shares will also recover. In actual fact, the other day someone said to me, he counted that I think that the Nasdaq will be on its brand new high in about 240 days and he can wait. And I just said nothing because I'm always worried if I see markets doing what they're doing, and it just shows you that there's still a lot of capital that's in these markets. And I mean, these markets are showing you that they can sell off. And that's why I want to kick off with the first request, and that's Diageo. Now, I mean, this is a massive company listed on the New York Stock Exchange, listed on the Nasdaq, by the way. And if you look at it, I mean, look at the sell-off. I mean, if you hold the stock for the long term and you bought at $222, all right, the share dropped from there all the way down to 162. And then you say to me, don't worry, I will just wait. I don't think that's such a good idea. Well, if you're 22 and you are still young and you can wait 40 years or 10 years or 15 years, that's a different story. But unfortunately, when you're at my age and you suddenly realize maybe I'm 60 plus and I'm buying Diageo at 222, then it's maybe tough to hold a share for 10 years or 15 years. But I mean, wonderful company. And let's look at the weekly chart here. For me personally, I will say I immediately see a beautiful falling wedge here. Now, a falling wedge is usually a positive formation, but I'm holding the 40-week moving average tonight on all these charts. I'm putting it up, and the reason why I'm putting it up is just to show that all these shares are mostly, well, maybe some here and there will not show that, but most of these shares are trading below its 40-week moving average. And many years ago, I read a wonderful book written by Stan Weinstein. And he always said that if he wants to buy a share, he will only buy the share if it is above the 40-week moving average. There you are. And look at the beautiful rally he had, all the way from, let's call it from 138 to 197. But then he said on the other hand, if he wants to sell the share, he will always sell the share or will avoid the share when it consolidates below the 40-week moving average. Now, the 40-week moving average is that old, almost you can say reliable moving average that everybody uses. Fundamental analysts use it, technical analysts use it. All of us are using it because it's such a wonderful, reliable almost you can say moving average. And Diageo is unfortunately trading below this, and that is negative. But what do we see here? Falling wedge. And where will this wedge break to the upside? Let's have a look here. It will break to the upside. There is my level, 176.02. Oh, sorry, 176.40 on the dot. And my stop loss for this share will be 163.60. And first of all, my first target will be this 40-week moving average. And then maybe if we're lucky, it can maybe go as high as that previous high of 193.76. Now, for all these guys that like to always look at waves, they will say, Frans, but look at it. This share has completed the 5-wave cycle. Okay, well, that's maybe right. There's number 1, 2, 3, 4, 5. So for me, I'm a guy that likes to look at candlesticks because that tells me the emotion of the share, what the informed capital are thinking. And I like to use also the stochastic because that tells me if it has rallied too far or dropped too low. And then I always like to look at the 40-week moving average, especially on long-term charts if you hold them for 5 years or 3 years or 10 years. But for me, in this kind of market, to hold a share for 3 or 5 or 10 years, it's a very, very, very long time. But I mean, some people do that. I've got some readers on my group that always buy shares and they're just holding it, they never sell. But that's their own opinion and they can do that. Let us look at Nike. Now, well, Nike, I mean, is this worldwide brand, I mean, of shoes I mean, a wonderful company selling all around the world. I cannot even think how many outlets they are that's selling Nike, but I mean, it must be thousands, maybe 100,000s. But look at the share price. I can remember I analyzed it for somebody and I saw this almost, you can say, irregular double top. And I was nervous about the share, but for me it was quite important. It broke below this support line a while back. There's that support line. That support line was sitting at 144.37. And then since then, I mean, we just saw an ugly sell-off here. And even look at these candles. Now we're starting to see a tiny little green candle there that tells you maybe it can give us a beautiful relief bounce. But there you are. There's the 40-week moving average again. It trades well below the 40-week moving average. For me, I'll be a little bit nervous. And what's interesting here, can you see here, the day when it broke this 40-week moving average, it opened up here with a gap. There's a gap. Look at that gap. Right at the day when it started to consolidate below this 40-week moving average, it broke below this gap. And maybe it will get to that gap sometime again, because the rule of the gaps are simple. It says it's either going to close today or tomorrow or sometimes in future. But for the moment, if you look at the candles here, I will say let's have a look here. Then we can maybe just zoom this one out. I mean, this is a clear waterfall formation. For me, I think you must hold on to before you buy it, and let's just draw this line in there. This is a support line that turned into a resistance, and for me this will be the first sign of strength when it gets above that line, and that line will break above $87.77. Above $87.77, we can maybe see a nice bounce to the top. But I believe while it trades below the 40-week moving average, we'll see bounces, yes. But unfortunately, the bounces won't last forever, and the share will probably go lower. So if you do buy it, make use of stop loss first of all, and don't be greedy on locking in some profits. But where's my stop loss? My stop loss will be $82.10, and my targets to the top, first of all, it will be this candle. Can you believe it that it can go there? Well, yes, of course it can, because about 2 weeks ago it was at 96.05, $100, and maybe back all the way to 103.17 in time to come. But take note, we are below the 40-week moving average, and what do we see? This 40-week moving average is making a curve, and it's a rounding top. That tells me that the momentum is to the downside. Just be careful, don't be greedy. Well, let's look at Telkom. I mean, Telkom held up quite well in this market where everything was sold off. And what do I see here? First of all, it trades above its 40-week moving average. I mean, that is positive. But what do we see as well? We see maybe a possible inverse head and shoulder here. Let's draw that line in. And there you are. There you can see the left shoulder. There's the head. There's the right shoulder. We're busy with the second right shoulder. And where will this chart look interesting? It will start to look interesting above 49.90. What is the target of this inverse head and shoulder? Let's first give you the conservative target. I like a share that holds up in a bad market, because that tells you that there's some serious buyers protecting the share price. And I just want to get the full target, but I'll give that through to you now. I just want to draw it in so that you can also see where do I get that from. My conservative target is always from the right shoulder top, bottom here, to the neckline, and I project it upwards, and that will give me a level of 53.70. And on the other hand, if I look at the full target from the head to the neckline, projected up, can maybe take us back to this old high of 59.80. But where's my stop loss? My stop loss is, first of all, there's my stop loss, 43.07, and it must trade, and especially this is a weekly chart, it must close on a weekly basis above 49.90 before I think that this share can maybe give us a beautiful relief bounce. Let us look at the Foschini group. I mean, the Foschini group also being hammered. I mean, top quality company, nothing wrong with that. And I mean, there was the high, recent high in June was at 167.59. And we've got like a formation here that I want to show you. And that makes me a little bit nervous. And there you are, same story. There's a left shoulder, there's the head, we're on the right shoulder. It looks like it wants to bounce off the right shoulder, but once again it trades below the 40-week moving average, so it's not a good sign for me. But I mean, this viewer wants a buying level, and for me, if I draw that little line in on a weekly chart, that will be the first sign of strength, and that will be if you can overcome this two ugly bearish candles, and that will be above 1228.34, and my stop loss will be 115.53. But where's the proper way? Where's the right way if you really want to wait, to be patient? And the other day I read a beautiful article where somebody say, what is the golden rule that anybody must have in markets? And that is, can you believe that? The word patience. You need to have patience, and if you've got patience, you will be successful. So the right place to buy is the Foschini group, and if you don't want to chase it, and you don't want to buy it above the first sign of strength, it will be above this resistance line. There's the resistance line, quite clear. The first proper sign will be above this 40-week. That will ring a bell for you that things are starting to change, but only if you serious buy it above 142.61. Then you know that the trend has changed and it wants to go up, and then you will say, okay, but I've got a beautiful falling wedge here that comes into play, and that can take the share back to 170, maybe, if that is true. But for me personally, at the moment, it's a little bit premature, but I mean, we've got viewers that don't want to wait, and they want that quick buck because the market has such volatility nowadays that you can do that. Well, thank you for watching the show. Visit our website, www.fransdeklerk.com, for more info, and we'll chat again.